Thank you very much, Rachel, for an excellent talk there. Brilliant. It's good stuff. So we're going to move very quickly on to our next speaker today, who is Alastair Speare-Cole. Alastair is the president of QOMPLX, which is a cybersecurity and insurance company. Very much looking forward to hearing what he has to say about the importance of cyber insurance and risk management. So please give a big hand for Alastair Speare-Cole.
Well, thank you very much. A friend of mine went to work for a company called the Hartford Steam Boiler Insurance Company. And it got me thinking about how close the reasons that Hartford Steam Boiler came into existence exist in our world today, but from a different sort of set of pressures. HSB was formed in Hartford in about 1866, and it was formed by some people who belonged to a thing called the Polytechnic Club. We use Polytechnic in a very different sense today, but in those days it was just people who were interested in different technologies. And across America, between 1830 and the end of the Civil War, 1866, there had been a huge expansion of steam power in factories, steam power in transportation, and along with that came a catastrophic number of explosions, killing people, destroying property, and it became uninsurable. You couldn't insure that sort of plant. And there was a culmination, a disaster, a paddle steamer called the Sultana had a boiler explosion on the Ohio River on a winter's night, and 1,000-odd people killed. And the guys in Hartford said, look, we've got to do something different. What we need to do is we need to think about sort of risk managing the whole business of boilers, inspecting them, having decent procedures about their usage, going and regularly making sure that they're maintained. And then at the end of it, we can actually give them insurance. And so what was uninsurable became insurable. Now, all of us live with risk in our lives. On the way here, your house, the car you drive in. And there are two ways of dealing with risk, other than completely avoiding the activity. One of which is to mitigate it, to do something about controlling it, reducing it. And the other way is transferring it. And mitigation and transfer at some stages get completely bound together. If something becomes completely unmitigated, it becomes almost uninsurable, untransferable. If mitigation is very good, then insurance cover becomes plentiful and cheap. So Hartford Steam Boiler actually cracked this in 1860s and transformed the way that both originally it was steam plant, and then it became things like elevators and things like that, how they operated. Now, the analogy is quite close between that and cyber insurance and where we are today. In the last couple of years, cyber insurance has become much more expensive, and insurers are trying to restrict cover, particularly around things like ransomware. There has been a rash of ransomware over the last 18 months, particularly during lockdown, but it was a growing problem anyway. And there are a number of challenges that insurers face when it comes to actually insuring cyber. First of all, and I'm going to have to drill a little bit into the fundamentals of how insurance is priced. The way you price insurance traditionally is you take the exposures of yesterday and the claims that came from those exposures, and you then say, what are the exposures today? And now we can predict the frequency and severity of claims that are going to come from today's exposure. The problem is that that doesn't work very well in cyber. 3 years ago, 5 years ago, 10 years ago, the sort of claims that we were seeing were based on a technology that's already moved on at lightning speed. And the second thing is, as Rachel said, this is a sentient attacker. This is an arms race between defense and attack. And so the result is that insurance companies have huge difficulty predicting the frequency and severity of claims that will happen in the next 12 months because the benchmark from the past is not very relevant. There is another problem that they actually all face, and that is the aggregation of loss. Now, I'm going to draw an analogy from another part of the insurance industry. If you can imagine an insurance company in Florida. Now, there, typically 80–90% of all the premium that an insurance company receives is paid out in claims. And that's from attritional workaday claims that happen every day of the year. The fire in the kitchen, the flood from the tank that leaked, or whatever. Where they have a problem is when there's a hurricane, and suddenly, instead of being 20% of their policyholders claim in any one year, 90% have claimed, and for big amounts. And that would bankrupt the insurance companies. So insurance companies mitigate or transfer. They transfer that hurricane risk to the reinsurance industry. And to do so, they need to be able to calculate, and there are companies that provide sophisticated modeling tools. They need to be able to calculate exactly how likely it is that their portfolio is going to suffer this sort of hurricane at this sort of frequency, and that allows both the reinsurer to price it and the insurance company to know that what he is transferring is fairly priced. In cyber, that is almost impossible at the state of knowledge that we have at the moment. You can't just say, well, what's my exposure as an insurance company? What's my exposure to AWS? It's really a fairly irrelevant thing. Or do I have huge exposure to Norton Security or Avast or something like that? Because almost all cyber claims emanate from a combination of technological defense being breached and human interaction with those systems. There has been no big catastrophe loss for the insurance industry, which has also meant that everyone has been slightly complacent. Solar winds, I don't know how many people in this audience are familiar with solar winds, and I'm not going to spend time describing it, but solar winds, major attack, got a lot of press coverage in the last 12 months. But solar winds would have been a catastrophe had it been insured loss. But actually what they were attacking was government departments and trying to steal government secrets in the US particularly, and therefore it didn't cause an insurance loss and hasn't challenged the system. But there is a big one out there, but no one knows quite what it's going to look like. And therefore the insurance industry struggles with how to price a potential catastrophic loss. And I'm going to do a slight aside here. If anyone, because I think everyone in this room will in some way be involved in technology. If you want to really scare yourself, and the insurance companies should be scared of it and are not, is the Carrington event in 1859. And you say, what the hell is he talking about, the Carrington event? Well, the Carrington event, Google it. It's scary. Big solar winds, winds, explosion in the sun, and it wiped out what was all the telegraph systems at the time. People were getting electric shocks from operating the Morse code machines and things like that. The prediction of a Carrington event, which is probably due, is $1 to $2 trillion globally. And how that will pass through the insurance industry and cyber insurance policies, no one is even really talking about, except I'm talking about it, but it's one of those things where there is a lack of anticipation. So how do insurers actually deal with the information that comes to them? There is an onion ring of things that they can look at. The first thing, maybe the outer skin, is that they take Cyber Essentials, or in America it's NIST. And what they do is they do some scoring off the answer to the questionnaires. It's pretty crude. The relationship between losses and the scores is still fairly uncorrelated, but it's a way of at least sort of separating sheep and goats and giving some idea of the relative vulnerability of a company. Has it actually got the basic house in order in terms of its policies and procedures? It doesn't in any way show whether those policies and procedures are being observed by their own staff. Another way that the insurance companies have begun to look at things is through some of the scanning companies, BitSight, through us. And there you can look at the external side of an insured's profile on the internet. You can actually scan for vulnerabilities. We have a little thing called Punk Spider, which we've relaunched, which continually crawls the web looking for website vulnerabilities and publishing them. So assess and scan is really at the moment the limit of where insurers go in terms of trying to assess risk. I think where they have to go in the future is the instrumentation of people's systems, particularly anyone who is big enough to have Active Directory or its equivalent, uses Kerberos authentications. Those companies who have that sort of infrastructure are still very vulnerable. And we as a company produce an instrumentation for that. We do a very heavyweight version of something that's produced by Microsoft called Microsoft Defender. We do sort of a much bigger and deeper version of that. And probably, I think we do about 3 billion Kerberos authentications a day across our client base. But instrumenting people's systems allows either for big companies, their own in-house team, to actually see what's going on. And for smaller companies, this can be done through a managed service. So you have a managed SOC where a third party is looking at the instrumentation on your system. The basic difference is that the assumption behind instrumenting a system is that people are going to get in. Any computer system that's run by humans has one big vulnerability: humans. And however much you put up better firewalls and better procedures, someone somewhere will get in. And the bigger the incentive to get in, the more likely it is to happen. And the only way that you can, I think, stop the real damage being done is to get hold of stolen credentials, people who are escalating privileges to administrator rights, and get at them quickly. You won't stop them getting in, but if you can spot them and stop them early, there is a huge correlation between the length of time that a bad actor has been inside a system and the damage they can do. If you can get them in the first 10, 15 minutes, there is a very big difference between that and someone who's been in there for days and then can create a backdoor and then they can access the system whenever they wanted, which was SolarWinds. So I think that relationship between getting onto people quickly who've got inside the defences and dealing with them is really important in terms of loss mitigation. So, the insurance companies of the future, I think, are going to do a number of things. One, I think they are going to get better at scoring off the static questionnaire type of data that they get from Cyber Essentials and from sort of things like NIST. Two, they're going to get much better at scanning. I think there's going to be greater degree of automated penetration testing, and so that's something that you, as an insured, you'll give permission that the insurance company or its agents can actually pen test. And then for bigger companies, and by which I'm saying anyone who has got Active Directory or its equivalent, then there will be, I think, a necessity if you're going to get wide cover at reasonable terms. You're going to have to accept that your system is going to be instrumented, and there will be either insurance companies or be third parties who will report to the insurance companies about that instrumentation. Bigger companies, it will be sufficient that you have the sort of technology that allows to happen. You know, some of the big companies have 60 or 70 people looking at various data coming from their systems, maybe 23 different types of source of data. So instrumentation is going to be very important in the future. The other thing that insurance companies already do is they provide help desks. This goes back to this thing that is, the sooner you can get hold of a problem that a client has had, the quicker you can start doing damage limitation. So a lot of insurance companies with their product offer a help desk which says, phone here if you've got a problem and we will help you turn off your systems. We'll have already sort of thought through how you're going to do backup. And so that's a fairly crucial way of closing down that window that a bad actor's inside your system. I think another thing that will come out of this is get well programs. There are an awful lot of people who they may tick the box when it comes to the Cyber Essentials, and they may tick the box when it comes to the external scanning. But it's only when you actually look from a stranger's eye at their internal disciplines. How many privileges are still, how many administrative privileges have they got running around the system which no one has closed down? Are there passwords that are still open for people who've left the company? It's that sort of discipline. So I think that for cyber to be insurable going forward, at least insurable on a wide enough wording that it genuinely transfers risk, there has to be a lot more risk management within the buying community. And I have a feeling crisis will drive that. I'm just going to end up with one sort of analogy, and I don't know that it's applicable to the insurance industry as we now see it as far as cyber is concerned, but, and I forget the dates, about 1830 something, the London Fire Brigade was formed. And the reason it was formed is that in those days, every insurance company had its own fire brigade in London, Birmingham, the metropolises. And they used to go and hammer a fire mark into the side of the building so that if your building caught fire and you called your particular insurance company's fire brigade, they could turn up and say, yes, the fire plate is on the wall, we will put out the fire. And if it wasn't, they'd go home. So at the moment, insurers are all got their own little fire brigades. And I wonder whether in some form or other we're going to end up in certain countries, probably not in the UK, with a sort of a national fire brigade help desk for people who have got a major cyber incident and can call in a government agency to help them sort themselves out rather than necessarily rely on the insurance company that they have bought a policy from. So thank you very much.